If you are like me years ago, when I used to be so confused by the credit terminology, credit language, or credit lingo that is being used in the credit world, that at some point I was even thinking of giving up on working on this credit score thing, because there were just so many terms that I did not understand. But at least you've got me. Do not worry, do not even consider giving up, because today we are decoding the terminology for you so that you understand these terms even better. I am your rural girl, and today we are simplifying terms such as debt review, like credit bureau, tribunal, negative listing, prescribed debt, blacklisting, PDA, which are known as your payment distribution agents, the breach of order, the debt counselor, debt rehabilitation, debt consolidation, all those terms, and all the way to what is supposed to be basics or known by me and you as consumers. Let us start by understanding the credit bureau. What exactly is credit bureau, you may ask? This is the company that collects, keeps, and maintains your information, your credit information. What do they do with this information? They distribute it to creditors such as banks, so that when you go to the bank to borrow the money or to ask for money, then the bank looks at this information that they've gotten from credit bureau. Then they decide based on that credit history that you have to either give you the money or not, or to either grant you the loan that you're asking for or not. So simply put, if you have a bad credit history, meaning that you are not paying what you're supposed to be paying on time, then you don't get the loan. But if you are paying whatever that you're supposed to be paying on time, then they will grant you the loan. Next is debt rehabilitation. What is that? Debt rehabilitation, it is when you are paying all your debt except for a bond or a mortgage account, simply because that is the huge amount that you are not expected to settle it immediately. You've got like a very long time to be settling that. But other than that, the other small debts or the other debts, either they're small or they're not small, it is when you are settling all those and you are left only with bond. That is the debt rehabilitation. The reason why this is such an exception, it is because it is such a huge amount that you are not expected to be settling it immediately. That's why you've got terms like 20 years or 30 years to be settling it. But that does not mean that you should not service it. Okay, you cannot pay it off, but you need to continue servicing it. But what do I mean by that? I mean that it has to be paid on a monthly basis as agreed. So that is the debt rehabilitation. Let us now look at the debt consolidation, what it means, the benefit, and the difference. Okay, this is an agreement that can only be provided by creditors such as bank to settle all your debts on your behalf, so that you do not owe amaskopas, you don't owe everybody everywhere. You only owe one creditor and you only have one interest that you are paying. Okay, and it is very important for you to understand that you have to qualify for this. So your creditor or your bank will first qualify you. Not everybody qualifies for this. I must say this. Not everybody qualifies for this. So the bank or your creditor will let you know if you qualify or not. So if you qualify, kudos to you. They are going to be settling all your debts, your scopases. They will just add them together and see exactly how much you're owing. Then they settle that on your behalf, where now you're only going to be owing them. You're only going to be paying them monthly instead of paying the entire South Africa. Okay, so you only owe them and you only pay them monthly, and you only have one interest that you are paying over that debt. Let us look at the example here. Let's say that you are owing 5 different stores. These 5 stores that you are owing, you are paying different interest rate per store, per debt, right? And then the creditor one decides to settle these 5 debts on your behalf. For an example, your debts, they amount to 50K. All right, so the creditor will come and say, okay, RG, you are owing 50K, right? What we'll then do, we are settling this 50K on your behalf. only if you agree that on this 50K, you are going to be paying an interest of 7% or 8%. This is just an example. The agreement will be in between you and your creditor in terms of the interest that you are going to be paying on that debt, right? I'm just giving you an example. And IRG agree that they do that. Then they go ahead, they settle my debts. Now I'm owing them and them alone, and that's 7% interest, right? Then what is the difference, you may ask? The difference is, instead of you owing different stores, you are now owing one creditor. Instead of you paying 5 different interest, you are now paying one interest. So that is the difference and the benefit at the same time. So the huge benefit here for me is obviously paying one interest instead of so many interest. Okay, so which adds up to be like a serious amount at the end of it all. So I find that very benefiting. But RG, wait, the creditors or banks, they also tend to have high interest. Okay. I get you there. I 100% get you there. What I personally find to be a better option in this case is when you have a bond account or you have a mortgage account that you have equity in it. So you then go to the bank and then you borrow against that instead of asking for a debt consolidation. So because the home loan interest tends to be lower than the other loans, that's why I'm saying, for me personally, it seems to be a better option to borrow against your bond equity or mortgage equity if you have. How do you know that you have? You visit your branch or you visit the bank that you have your home loan from, and then you ask them if you do have equity or not. How exactly is equity calculated? You may be confused. Let me break it down for you. For an example, 10 years ago, you bought a house that was at 1 million rand, and now 10 years later, it is worth 1.3 million. So what you do, you take the current value, which is 1.3, you minus the 1 million, then the equity there, it is 300,000. So only the bank will then approve that, because they will need to send an evaluator to come and evaluate the property and see if it is worth that amount, or if again you have equity in that property. Okay, but if you have equity in that property, kudos to you. Then instead of getting the creditor to consolidate your debt, you can simply borrow the money from your bond account, pay everybody that you owe, so that you only owe your home loan and nobody else. And by so doing, it is highly important for you to understand that you have now increased your home loan amount. It is now no longer 1 million, it is now 1.3 million minus what you have paid. Okay, so by you tapping into your equity means that you have opened up another debt. By so doing, there will be another admin, which is paperwork that needs to be done. It is like a new process, but it is doable. You just need to be patient. So I find that to be having a lower interest rate than the normal credit, like your loan or your credit card or whatever that you decide to go with. So if you do have a home loan, please look into that. See if you've got equity. And if you have equity, check if it's enough for you to be settling all your debts so that you are left with only one debt, which is your home loan. And please, later on, once your finances are stable, do pay extra in a home loan account. It will help you in future. And I must say again, I must remind everybody, always when you are opening a home loan account, open an access account, it will definitely come in handy later. Now we are looking at debt to income ratio. What is that? Debt to income ratio is the percentage of your income that goes towards paying your debt on a monthly basis, and how much or how many percent of your income is left after paying the debt that you can use for your household needs, such as your groceries, petrol, transport, or whatever. The importance of it is to show exactly how much of your money goes where. And that determines if you should be getting the loan or not. It also helps when it comes to review, go to how much is going where and how much can be reduced in order for you to be getting a better income to take home on a monthly basis. This is how you calculate it. You take the total amount that you are paying your debts every month, whoever that you are paying on a monthly basis, you list them, list all of them. So if you are paying 20 debts a month, you list all 20 debts, right? Get the total of that, then you divide that by your monthly income. Whatever that you are going to get there, that is your debt to income ratio. Now, prescribed debt, what is it? This is a written off debt, or this is a bad debt that creditors needs to report it to credit bureau so that credit bureau updates its status to prescribed. This happens after 3 years of that debt not being paid, which means the creditors need to report it to credit bureau that this debt, it is not being paid, not creditors updating it as closed, removed, or in areas. It's because they just love that, that you are in areas of, if a debt is more than 3 years, it's supposed to be prescribed, not removed, not closed, not in areas. When you have this debt and you get a call about it in 4 years, you are not supposed to be acknowledging it. Why? What do I mean by that? So when a debt collector calls you and say, Rua girl, we see that you are owing so and so store 3,500 that you have not paid since 2001. Then you do not need to acknowledge that because that debt is supposed to be prescribed already. By you acknowledging it and say that, oh yes, I know it, oh yes, I remember, you are now reviving that debt. That debt is supposed to be prescribed, not reopened, not revived. Now, because of the recording, they will have you acknowledging the debt, and by so doing, the debt will then be revived. Okay, I know I'm a rural girl, but I know one or two things. That is one of the two things that I know. Do not acknowledge a debt that you've been owing for more than 3 years. Instead, find a credit expert and explain the situation. They will know exactly what to do. They will obviously help you analyze your account statements and see which debt needs to be prescribed and which one does not need to be prescribed. Let's go to an example so that you understand exactly what I mean by this. Okay, 4 years ago, you had this debt that you've forgotten about it, right? And 4 years down the line, you're deciding to be buying a house. Okay, you go to the creditor, like, okay, creditor, I am looking for a home loan. Creditor says, okay, bring in the paperwork, and then they look at the paperwork, and then they try to look you up, and they say that, wait a minute, something is popping up here. Couple of years back, he had this debt that you did not pay it. Therefore, it is blocking you from getting or from us granting you a home loan. And then you get worried or you get curious. You're like, okay, who is that? Please give me their contacts. Then they do give you the contacts out of curiosity or shocked or anger, whatever that you will be going through at the time. You either call these people that popped up or you email them. By so doing, you are reviving the debt. Do not contact them, and when they do contact you, you do not acknowledge this debt. So, what do I then do instead? You find a credit expert, you explain the situation to them, and then they will know exactly what to do. Again, they will run what they're supposed to be running and check what they are supposed to be checking. Obviously, they're going to be analyzing all your accounts and then coming up with a statement. From there, they will then see what needs to be prescribed and what does not need to be prescribed. And then they will help you prescribe what is supposed to be prescribed. Okay, great. And the top tip here, please always get your credit report from credit bureau once a year, which is free. Then you will be able to see what is happening in your credit history and what is it that you do not know about. The stuff that you do not know about, or whatever that will show up there that you do not know about, you dispute that. And then what you know, obviously you will know how to remedy that situation of yours. If again you do not know how to deal with your shenanigans, speak to an expert. They will help you deal with the shenanigans that you have. Understand that we all have our finance shenanigans and you always have a right way to be dealing with them. Do not try to remedy the situation yourself if you do not know the right way to be doing it. Find somebody who is qualified, who's going to be helping you to do it the right way. Now, let's talk about what gets people angry. What gets people confused? What gets people don't want to be talking about anything that has to do with credit and credit score and whatnot? That is debt review. What exactly is debt review? Debt review is the legal action that manages debt to income ratio to focus on the elements of the country while giving me and you as consumers an opportunity to rearrange our original debt so we can take home a better income than paying most of our income towards debt. This is just a rearrangement or an extension of the terms of your contract. You are still expected to be paying the full amount of your debt, but the terms will then be rearranged or extended compared to what it used to be before. And there is now a debt counselor involved. That is now the difference. There is now a middle person involved between you and your creditor. This is to be acted on before the legal action has been taken against you. So, how do you know when exactly the legal action will be taken against you? You will receive a communication either via an email or a letter. In that communication, there will be days stipulated there. Usually it is 21 working days, but not all of them gives you 21 working days, okay? Please make sure to read and understand that letter and take note of those given days, right? Let's work with 21 days for now. Let's just say that you are given 21 days to remedy your situation. How do you remedy your situation? You either speak to the creditor themselves or you speak to the credit expert, or you opt for a debt review. Whatever that you will choose to remedy your situation, it has to be within those stipulated days. We say 21 days for argument's sake. So whatever that you will choose to do, it has to be within those 21 days. Should you fail to do so, then the legal action might be taken against you. And once that happens, should the legal action be taken against you, then the creditor, the one that you owe, do have a right to not want to participate in the debt review process. Should one decide to put, okay, now it's day number 23, let me quickly, opt for a debt review process. Okay, but keep in mind that they can say no, they don't want to be participating in that and choose to carry on with the legal action. Okay, that is why it is so very important for you to work within the stipulated date. You are given 21 days, then decide exactly what is it that you are going to be doing and do it within those days. So that is why most people get so angry when this topic is raised up, because most people don't really understand how this thing works. You find people getting the communication and then they cheat, they still think about it. Sometimes they even forget about it. And then once they get a letter, maybe from a lawyer or something, how they quickly run to register for a debt review process, which might be late, in most cases, which is late. So you don't want to be like the majority of people who want to be doing the debt review process after the legal action has been taken against them. No, you want to be doing that within those days that you are given, so that when this topic is raised, you don't get confused, you don't get frustrated, and then we're seeing some more changes. No, understand it and act accordingly. Now, let's look at the common reason why most people opt for a debt review, even those who are not supposed to be under debt review. Because honestly, so many people are under debt review and they are not even supposed to be there. Okay, the common reason, it is because of that prescribed debt that we spoke about earlier. So most people, they are having debt that were supposed to be prescribed already. And because they didn't speak to a professional, they did not get to know that the debt is supposed to be prescribed, and the expert was then going to be helping them to formally prescribe this debt. Therefore, they find themselves under debt review, even though they do not belong under that review. And they are so frustrated, under that debt review because it is actually not working for most of them. You might be one of those that the debt review situation is not working for you. It would have helped to find out what is prescribed and what is not prescribed. And from knowing that information, you were then going to be advised if that review is the right path for you or not. And I bet you most people are not supposed to be under that review, because once you speak to somebody who is an expert in that field, they will help you formally prescribe debts that are supposed to be prescribed, leaving you with just few debts that you are supposed to be paying. And having those few debts, I doubt that you will be under debt review. So yeah, that is the common reason most people are under debt review, frustrated and angry because they are not supposed to be there. And mostly this debt review thing is just not working out for them. Now, let's talk about the inaccuracies. What is inaccurance and when does it happen? This is when you have paid your debt or you have made an arrangement with the debt collector to be paying that debt, but they forget to be updating the credit bureau. That is then called, or that triggers an inaccurance with the credit bureau. Okay, so it is very important when you've paid your debt or when you've made an arrangement, whoever that you arrange with or whoever that you paid, you update the credit bureau so that when you're not going to be having inaccuracies in your profile. Guys, it is raining outside. So if you hear some sounds and please bear with me. I just have to finish this video. Right, so I've just mentioned debt collector, and before you get confused, let's get to understand who is the debt collector. A debt collector is the company that buys your debt from your creditor that you are no longer paying to your creditor. You have a debt, for an example, with whoever, and you are no longer paying them what you are supposed to be paying them. They then sell your debt to debt collectors to be collecting this money from you. Let's look at an example of how all of this is done. For an example, you are owing an amount of 50K to a creditor that you are not able to pay back. What a creditor does, they sell your debt to a debt collector at a discounted price, meaning that the debt collector is now not going to be paying the 50K that you owe. They will obviously give him or her or the company the discount. For an example, let's say they buy the 50K debt with 30,000, right? And once that process has been done, the debt collector will then start calling you, hoping to recoup the money that they used to buy your debt. You will notice why they will be on your ear calling you, I don't know how many times a day. It is because they spend money to buy your debt. Looking at timelines, what are timelines and what do they mean? Timelines are the dates specified on the communication, either the letter or the email that you'll be receiving from your creditor, allowing you to remedy your situation. Now, judgments. Judgment. What is a judgment? A judgment is a legal way of repossessing your assets after you have been given an opportunity to remedy your situation and you did not do so. Simple. You were given time to remedy your situation, but you did not do so, then the legal action will be taken against you for your assets to be repossessed. Simple as that. Do not wait until your assets are repossessed and then you think that you can now start applying for debt review. Doesn't work like that. Once you're at that stage, that is now a legal process. Unfortunately, you cannot apply for a debt review at this stage. Tribunal. Who is tribunal and what is it that they do? Their role is to make sure that every party involved is protected. Just as easy as that. That is what tribunal does. Now, let us look at the PDAs, known as Payment Distribution Agents. Who are they and what is it that they do? PDAs are companies that are registered with NCR to make sure that the money received from clients like me and you are distributed accordingly. Why are they important into this mix? It is because you as a client are not supposed to be paying the money to the debt counselor. You are supposed to be paying the money to them. So there are 4 of them. Your debt counselor should be using 1 of them and there are 4. Breach of order is when you or me as a client are not able to live up to our promise. You're not able to be paying what you agreed to be paying. So if this happens, then the debt counselor needs to inform every party involved that this one is now not able to be paying what he or she said she was going to be paying. That is called a breach of order. Finally, let's look at the basics that me and you needs to know. Number 1, we need to know and understand our finances. Number 2, we need to know what we can afford and what we cannot afford. Number 3, you need to say no to things that you cannot afford. And number last, we need to know how to make an extra income so that we can be able to pay whoever that we are supposed to be paying. Okay, to avoid all the drama that we've just spoken about, the debt reviews and blacklisting and whatnot. You don't want that. Okay, RJ, but I think I need to be under debt review. What is it that I need to know? Number 1, you need to know that your debt counselor needs to be registered with NCR. Number 2, you need to know that you don't pay the money to your debt counselor, but you pay your money to one of the PDAs that are also registered with NCR. Your debt counselor needs to be working with one of the 4 that I mentioned, which is obviously Hyphen, DCM, CollectNet, DC Partners. Right, this brings us to the end of this video. If you found value in this video, please like, subscribe, and comment below. Let me know what is it that you've learned and what is it that you'd like to know more regarding the decoding of the terms of the credit world. Then I'll try by all means to go find it out for you and come back and we decode it together. And again, if you want to create an extra source of income for yourself so that you can improve your credit score by paying your installments in full every month and on time, or you just want to get out of debt review, or simply because you just want to, whatever that you want to do, please do check out this video. It's going to take you through steps of how to do so. Also check the links on the description box. That's going to be helping you in terms of improving your credit score. Download the 5-day challenge. It is free. It will also help those who are looking into improving your credit score. It is very useful. Please check the description box and then you'll find links there, and then you click on the links and then you download that free 5-day challenge. It is very helpful. Thank you so much for staying till the end of this video. Now that you know the basic terminology of the credit world, it is going to help you in improving your credit score. Until next time, bye.